Learning how to find good stocks to buy starts with understanding your investing style, risk tolerance, and stock trends. It also starts with research, and a lot of it. The tips in this video will help you become an informed, confident investor who knows what to look for when approaching the stock market and researching the best stocks to buy. With that said, let's get started. The first tip is to know your risk tolerance. Risk tolerance refers to how much risk you're willing to take with your investments, and it's unique to each investor. Your risk tolerance can change throughout your life depending on your goals. The best stocks for your risk tolerance and goals will likely look different than the best stocks for your friends or your family members, and everyone has different goals, and it all depends on your net worth, which will affect the level of risk you are willing to take, and obviously your portfolio should reflect just that. When looking for good stocks to buy, consider the timeline for your goals. Consider how liquid or accessible you want your assets to be. Think about your comfort level with investing in smaller startups, how much you want to invest in stable, lower return stocks. All of these considerations will be unique to you and will help you find good stocks to buy for your portfolio. Number 2 is to determine your investing style. Just as every investor has different appetite for risk, each investor has their own investing style. Your investing style depends on how much time you want to devote to watching market trends and movements, how much risk you are willing to take with your investment goals, your timeline for investing, and more. Here are a few questions to ask yourself when considering your investing style. Are you looking for short-term profits? How much time do you want to dedicate to studying market movements? Do you prefer a set it and forget it strategy? And lastly, do you want to be able to reinvest dividends from your stocks? Number 3 is to research companies before you invest in them. Finding good stocks is all about research. Although it seems like a single transaction, buying a stock is buying a share in that company, so you want to make sure you do your research before investing. It's important to know the companies you're investing in because as a shareholder, you will be directly impacted by the company's decisions. Here are some questions to ask yourself as you research if a company is a good fit for your portfolio. What does the company do? How does the company make money? What does the future of this industry look like? Do you trust the company's management, and are the values of management aligned with the values of stakeholders? How does the company's balance sheet, income statement, and cash flow statement look like? Do you have insight into their financials, and what is their debt to equity ratio? Another one is, what is the company's EPS or earnings per share? Do they have a competitive advantage, also known as a moat? And questions like these will help you examine both the quantitative and qualitative aspects of a stock and company. Number 4 is to use a stock screener. Stock screeners are excellent tools to help you find good stocks to buy and can save you a lot of time. A stock screener lets you filter through hundreds of stocks based on certain parameters you set, like market cap, share price, sector, price to earnings, and even more. There are dozens of free stock screening tools. You can literally type in stock screener on Google. And they might look different but follow the same idea. You can select the metric you want to use and input the value you want to screen for. All you have to do is search or run screen, and you'll see every stock that fits your criteria. You can continue adding more criteria to your screen to narrow down the field and focus on the stocks that are best for you. Number 5 is to look for trends in earnings growth. To find good stocks to buy, look for companies that have increased their earnings over time. Increased earnings are a good sign, but you also need to look at the value of stocks to decide if it's worth the investment. Earnings growth and value should go hand in hand. The stock market has a few variables that track this relationship to help investors find good stocks to buy. Price to book ratio is one of them. The price to book ratio values a company as if it were to be disassembled and sold today. This value score can include everything from earnings and equipment to buildings, land, stock holdings, and even bonds. It provides a value for everything the company could hypothetically sell. Price to earnings is another one that you've probably heard of before, and it's a great metric to look at when valuing stocks outside of just earnings growth. It helps investors determine whether a stock will stay up after a significant increase or if it will just fall back down. You can compare PE ratios of stocks in similar industries such as energy, healthcare, or biotech, and you can think of this metric as how long it will take a stock to pay back your investment. You can also use a stock's PE ratio to find potentially undervalued stocks. Remember, we're not just interested in stocks that have a low share price, which could mean that they are not worth buying. Instead, we're looking for stocks that are inexpensive to own but offer good value for their price. A good PE ratio will depend on several factors, but a PE ratio of 16 to 20 is usually a good starting point. Obviously, it depends on the industry. Another ratio that the market uses to determine good stocks to buy is the price to earnings growth ratio, or let's call it the PEG ratio. It also incorporates a company's historical growth rate in terms of earnings by taking a company's PE ratio and dividing it by the year-over-year growth rate of its earnings. Number 6, and this is the last one, it's to start small. Investing can be overwhelming, but getting started is the first step, and it's better to start small than to not start at all. Find a stock to invest in, monitor its performance, looking for trends along the way, and this can help you to ease into the investing game and build your confidence.